All right, thank you. It's a pleasure for me to be here today. As you mentioned, I'm the finance director for Lehi City. I've been there about 4 years, but I've also been finance director at 3 other cities, Pleasant Grove, Cottonwood Heights, and South Jordan as well. So I had some experience there. I've been involved with this for about 20 years, and I know I'm biased, but I really think putting a budget together and how the finances are operated is extremely important and one of the most important things you'll do. It's funny, we often kind of comment that it seems like a big deal, and it is a big deal, but a lot of times it doesn't get a ton of public comment when we do our public hearings on a budget, and I think sometimes it's just hard for people to get into and really understand the details of what's going on. So hopefully with our discussion today, maybe we can enlighten on some of that. Good. So I have a few things that I'd like to discuss just on putting your budget together, what our process is with Lehi and other cities that I've worked with, kind of what your calendar deadlines are. There's certain statutory deadlines that you need to meet, the way to amend your budget, and just a general discussion on how we pay for government services in the state of Utah. I think that'll probably take me about half an hour, and at that point I'd like to hear if you have questions or other topics that you'd like to discuss. Again, I've been doing this quite a while, so I think I'm fairly conversant on most topics. If I don't know what I'm talking about, I'll just tell you. I won't fake it. But I have some other slides on some other topics. If there's nothing else we'd like to discuss, things like just truth in taxation. If you're not familiar with how property taxes work in the state of Utah, whether we discuss it today or not, I think that would be a really good topic for you to understand. Impact fees, redevelopment areas, bonds, things like that. So once we get to that point, we'll have some questions. If there's other things we want to talk about, we'll just go whatever direction it leads to. The process in general of putting your budget together is going to start right away. For the city of Lehi, we're starting it right now, really. So as a finance department and staff, we're putting some numbers together on revenue projections, starting to get requests from departments on things that they would like to do. Every city I've worked for has something similar to this, whether you call it a budget workshop, a budget retreat. Lehi, we kind of just do a one-day meeting, full day, like 9 in the morning till dinner time, where we discuss strategic planning types of things. I've worked for cities where we've done it kind of over a Friday and a Saturday and taken 2 days to do it. But really, this is your opportunity. I know many of you may have run with the desire to get onto the city council or as a mayor with certain programs that you'd like to see initiated. You may have gone on there with certain programs that you'd like to see discontinued or something like that. This would be the opportunity to bring those up. If there's buildings that you'd like to see built, parks that you'd like to see built, this is the time to let the city staff know that so they can try to work those things into the budget. This comes up now and again is what, as a staff, sometimes we'll get a direction from a city council member saying, I would like to see this, but obviously we have to be careful on how we're putting that budget together. We need general direction from the entire elected body, right? So I think that sometimes is a challenge and that you have as an elected official is not only to get your good ideas through, but convince at least a couple other city council members that they're good ideas as well, right? So, but this is the time for you to do that. Focus on what you would like to see in that budget when it's finally completed. Also at these meetings, you'll probably get some preliminary revenue numbers. As a city, the biggest variable and the biggest number is usually sales tax. So we're going to talk a little bit more about revenue numbers in just a minute, but sales tax is a big variable. Most cities, sales tax is your largest revenue item. And it's also the item that could be volatile, right? So a year ago, I saw many articles in newspapers around the state saying certain cities were worried about our budget with the pandemic coming on. What are we going to do? Do we need to lay off people? Do we need to cut back expenditures? And if you've followed it at all, sales tax numbers last year were actually really fantastic for most cities. I realize there are certain cities that got hit hard, cities that rely on a lot of travel and tourism and things like that. But most cities, sales tax numbers were not only higher than the previous year, higher than any expectation, and did really well. So it's a variable that we're trying to do. And just so you understand, sales tax numbers, so we just recently received the sales tax results for the month of October. So really, and a lot of it depends so much on November and December retail sales, right? That it's really hard to make a long-term or a real accurate forecast until you get those December numbers in, which we're not going to get till the end of February. So these numbers are probably preliminary. You're going to get more numbers later, but just keep that in mind. The other thing is, another good topic to discuss at these meetings is your employee pay plan. That's obviously a touchy subject a lot of times, but realize for your general fund, which is probably what you're going to spend most of your time putting your budget together around, employee costs are probably 65 to 70% of that budget. And so it's probably the main thing that needs to be discussed. We're going to see CPI numbers come in next year or next week that year over year inflation numbers are, I would anticipate, being higher than 7%. So that is probably going to be a discussion you're going to have in the upcoming weeks to discuss what you're going to do with your employee pay plan. Once that budget, again, workshop, retreat, whatever you call it, is complete, the next step is really, I think, up to the city staff. So I think sometimes there's different understandings or different opinions on how the next phase of this should go. But really, I would encourage you to allow your staff and your finance director and your finance people to take those strategic plans that you just gave them and put them into a format that is a budget. Sometimes, I'm trying to say this sensitively, but sometimes if the elected officials are trying to get in and and involve themselves regularly and often as this process is going on, it just makes it a little bit more difficult. Again, we're trying to get that direction from our elected officials, put those together in a budget that makes sense, and we'll come back with you with those numbers. It doesn't mean that you don't have a lot of input and a way to influence those later. It also doesn't mean you always have a right to ask whatever question you'd like and get what information you'd like. As a staff, we're trying to put that budget together in a way that complies with state law, which there's a lot of rules with that, and with generally accepted accounting principles. Sometimes I've seen requests that they don't balance, or they don't make sense, or they don't work, or it requires money from other places that don't work. So really that next phase is to allow your city staff to put together that budget in a way that works. There's different ways that cities do their budgets, and there's not really a right or a wrong way. But I've seen a lot of different understandings from different elected officials on how they'd like to see it go. So the question is, are you budgeting for line items, or are you budgeting for departments? And I would say if you're budgeting for line items, that gets a little complicated, because if you're going to go to the police department and say, well, you're going to get whatever, $5,000 for office supplies and $30,000 for training, that means if any line item goes over at any time during the year, they have to come back and do that as a new request, and maybe that's what you want. I don't think many cities do that. Maybe I'm going to even say maybe any cities do that. But most cities, what you're going to do is say, we're going to allocate you a department budget, and yeah, if your office supplies line items is over a little bit and your training line item is under a little bit, then it's fine. That's really how every city I've worked for has done, and that's how I would probably recommend it. Again, if you're actually allocating a budget for every line item, realize that that's really the law at that point, right? That they would have to come back to you for any changes, which could happen a lot. I'm going to address zero-based budgeting just quickly. Again, Every city does it differently. I don't know very many cities that really do zero-based budgeting, and by that I mean that essentially your budget's wiped out every year. You need to come back and justify every single expense for every line item in your budget. And generally speaking, we don't do that because, one, it's most cities don't have the personnel resources to make that work. You're talking about having someone in every department. You really need a bigger city that's going to be able to do that, because you're going to need a budget person really in every department that's going to be able to manage those things. Usually you're going to give a base budget of some sort. Again, say if last year you had a certain allocation, and this year you're going to have to justify any expenditure above that. That's probably the most common way to do it. I would say if you have concerns about any department's specific budget or any specific line item, ask them. That would, in the strategic planning part, that would be a really good point to ask. Say, I have a real concern about this department's budget, or this department's what they're spending in whatever kind of supplies or training or whatever. That's a great time to ask for detail on those things. And you have a right to know that information, and your finance department will be able to get that to you. We've done things at some cities where I've been at where I kind of call it program budgeting, where instead of saying fire department has this allocation, planning department has this allocation, we try to budget it by, if you think of a police department, you might have investigations budget or a patrol budget or victim advocates budget, things like that. So try to have a budget by program. That takes more work, but it's probably something that you could request and could receive if you're interested in. It gets a little challenging because sometimes when I've done this in the past, we have to take a lot of costs and allocate them out, right? So if you have front office staff in your police department and they don't really work for investigations or patrol or victim advocate, they work for all of those groups, and so you're having to allocate those out. And so when you're coming back and saying, I want to reduce budget in this program, you're not just affecting those employees in that program, you're affecting other areas as well. Next step is just look at some dates that are important. By the first city council meeting in May, you're required to receive a tentative budget, is the term that we'll use. So if the idea is in January or February, you're going to do a strategic planning session, February, March, April. The city staff, and probably on the direction of the mayor or the city manager, city administrator, are going to put this budget together, hopefully that's compatible with state law and with the direction that they've been given. That budget is going to be presented to you the first city council meeting in May. And it's called a tentative budget. And I've had some city councils maybe not understand what that means and feel a little uncomfortable, because you do adopt this tentative budget by resolution. But really the idea, it's similar to how maybe the state works, where the governor presents a budget or prepares a budget and presents it to the state legislature, and then at that point it's the state legislature's job to finalize that budget. And it's similar to that. So you're being presented with that budget on the first council meeting in May, but it's going to be several weeks before it's finally adopted, and you have lots of opportunities to review it, question it, ask specific questions of departments, ask specific questions of the finance, your finance people, and find out if you have concerns about something that's in there or not in there, that you have lots of opportunities to do that. It's a working document that you have opportunities to change. By the end of the year, so by June 30th, you need to formally adopt that budget. It's very important. Before it can be adopted, you need to have a public hearing where the budget is available for public inspection for 10 days, and then that public hearing can come about. These public hearings, my experience, I haven't seen a lot of attendance or a lot of comments, but it's very important that they have that you have that public hearing. Sometimes we'll schedule the public hearing as the same day as the adoption. I found it probably more useful to schedule the public hearing with the ideas, because and it just comes down to if you're going to adopt it the same day that you have the public hearing, if there's things that come up in the public hearing that are concerning and you would like to discuss further, you don't really have that window to do it, right? So I think it's a good idea to have your public hearing. Maybe a lot of cities have 2 council meetings a month, some have more, but if you have 2 a month, maybe schedule the public hearing for the first one in May and schedule the adoption for the second one in May. That gives you an opportunity that if something is brought up during that time, that you have the opportunity to address it. The only exception to that is if you're going to do a property tax increase. So if you're going to do a property tax increase, go through the truth and taxation process, that public hearing has to occur in August by state code, state law, whatever it is. And so you really can't do that. So if you have a situation where we are doing a property tax increase, then that tentative budget allows you to operate your government finances until that property tax increase and the final budget is finally adopted in August. Final budget, one, it needs to be consistent with state law, which means it needs to be balanced. I think sometimes people there can be different definitions for a balanced budget. Balanced budget doesn't necessarily mean that the revenues coming in for the year match the expenditures going out for the year. If you for some reason have a surplus from previous years that you want to spend in this year, and that using up that surplus is part of a revenue source to make your budget balanced, that is fine. If you have a construction project, maybe in your general fund that you're going to borrow money, so it's almost taking debt proceeds to make that budget balance, that's considered a balanced budget as well. It just means that when you're planning on money coming in and money going out, again, even if it's money that's being saved from a previous year or money that's coming through the proceeds of bonds, that's still a balanced budget. Budget also needs to be consistent, meaning that restricted revenues are watched out for. So I can't use impact fee revenues to pay for operations. I can't use the road sales tax money that I get to do maintenance projects. Those needs to be more construction type of projects. If I have other specialized taxes, I need to use those for what they're specifically intended for. And your finance department should know those things and help you keep track of those. I do want to bring up just quickly administration fees and transfers. You'll probably hear those terms coming up. They don't mean the same thing, even though a lot of people use the term transfer when they're referring to administration fee. So an administration fee, if any of you are cities that do utilities, so like Lehi, we do power, water, a pressurized irrigation system, a storm drain system, a sewer system, garbage. So if you ask me, do I work for the city general fund or do I work for those utility funds? I work for both, obviously, right? There's times I'm doing work that's related to the water fund. There's times I'm doing work that's related to the police department. The water fund doesn't have its own city administrator. And so it's understandable and allowable and legal and makes sense that some of the costs of those administrative fees, like for your finance department and your administrative department and your elected officials, some of those costs can be allocated to those utilities, call them enterprise funds. And so that's what I would call an administration fee. It's just a way to have those funds pay their fair share of those costs. A transfer is really a subsidy type of a transfer, right? So a transfer is when this fund, the revenues that are coming in from this fund are not enough to pay for all of the expenses, so we need to take money from another fund, probably the general fund, and put it into that fund so that it can maintain its operations. So, and both are fine and both are common. Most cities have both of these in their budgets, but don't get the two confused. If we're saying it's a transfer, it's really a transfer from one to the other. So yeah, you'll have both of those, and both are fine, but a transfer is really a subsidy type of a thing, where administration fee is them just paying their portion of the costs. Your budget's going to be adopted in June for the full year. There's going to be things go on during that fiscal year that you may not be planning for or may not have been able to foresee. Sometimes we get road projects that come up because maybe a water line breaks and destroys a road, and we need to fix that road, and it wasn't on the plan originally, so it needs to be done. The process to amend your budget is essentially the same process as to put it together. So we just identify the departments or the areas that need to be adjusted. There still needs to be a 10-day public hearing, and then you can adopt that budget. And I'll speak on behalf of the state auditor's office. They would always say, they really want you to amend that budget first and then go ahead with the expenditures, not spend it first and then come back and change it later. And that's easier said than done, because realize in order to amend a budget, it's a several week process. If I have 2 council meetings a month and I have to do a 10-day public hearing, it might take me 30 days to get this budget amendment processed. And if something's urgent out there or critical, you're probably just going to end up doing it anyways. But what the state auditor's office doesn't like is, and I've been guilty of this at times too, and I think most cities do, but we'll have a discussion with the elected officials saying, hey, this has happened, we need to make a budget amendment for this reason, are you okay with that? We'll get kind of a confirmation from them that they are okay with that. We'll go ahead and proceed and then put it into a budget amendment that doesn't come before them for a couple of months. And what's missing there is the public input, right? So if there's something that happened and maybe someone for the public would have a concern with that, and they come in and have a public hearing, well, and you say, well, I appreciate your concern, but that's actually already happened a month ago. That's not necessarily a good look. So when you can, and most of the time you probably can, we should be, again, we decide we have an amendment we need to make, we go through the process, we have a public hearing, and then amend the budget. Your government services for your general operations, I want to talk about just how those work differently than the utility funds. I think it's important to understand it. I hear a lot of comments from citizens sometimes, and even elected officials sometimes, where we speak of some of these things as if they're coming from the same funding source, and they're really not. So when we think of general government operations, and in my mind I'm thinking police, fire, streets, parks, things that are paid for by people through sales taxes and property taxes. There's not a fee associated with it. Can't remember what I got on my next slide here. Yeah, those are generally funded through taxes, right? So property taxes, sales tax is generally your largest one for most cities. Even if you're a city that doesn't have a huge sales tax or a retail base, sales tax is probably, like when I was in Pleasant Grove, sales tax was still larger than our property taxes. There's a municipal energy tax, if you're not familiar with, that's on your utility bill for gas and electric. That's 6%. That's another way that we fund general government services. I think the key to think about those is there's not really a key between who receives the service and who pays it, right? I remember reading an article once in the Deseret News, and it had to do with property taxes, and I can't remember the article. I just remember the comments that I read, and which is never a good idea, right? The comments at the bottom of those articles, those are usually not the smart, I shouldn't say smart, not the greatest comments. But this person made what was actually a really good point, but at the same time somewhat irrelevant. He said, I own a home in, I can't remember, Salt Lake or somewhere. That's where I live, but I also own a second home in the Wasatch County in Heber. And he said, and he just talked about it's really unfair that when my home that I own in Heber, I have to pay property taxes on 100% of the value because it's not my primary residence. If it's your primary residence, you only pay tax on 55% of the value. He says, I don't have children that go there that go to school, which is where most of those property taxes go. And I'm not really receiving that many services from the city. And it's really unfair that I pay more property taxes as a non-resident of Wasatch County than the person who lives next door who probably has a similar home and does receive those services. And that's true, what he said, but it's not really, I don't want to say it's not relevant, but it's kind of not relevant because the taxes are determined by a formula that's in the state law, and there's just no nexus between who's going to pay that and who's going to receive those services. So that's all I'm kind of pointing out. So when we talk about those types of government functions that we do, there's just really not a connection, and they're funded just through general taxes. Yes?
One thing to point out on you mentioned the energy tax, there's also telecommunications tax that's tied to that, and that's actually bigger.
Telecommunications for telephones, right?
Cell phones?
Cell phones and telephones, yeah. Yeah, there's a 3.5% tax on your cell phone or landlines, yeah. Thank you. You also, a lot of cities also have other types of sales taxes. There was a couple years ago, there was a new sales tax allowed and adopted. I think it's pretty much everywhere now for road reconstruction. And so road funding, I've got a slide on that in a minute, but I'll just talk about it now. Most of your road funds come through gas taxes. So when you buy gasoline at the pump, you're paying a gas tax, which is really a state tax. The state allocates 30% of that to cities as a grant, essentially, to do really any kind of maintenance. It can pay for your street department staff, it can pay for salt, it can pay for leases on snow plows, things like that. This sales tax that was adopted a couple of years ago is a little more restrictive. It needs to be for really major, I'm not sure if I'm going to even use the right term, but major maintenance or road reconstruction, bigger projects. It can't be used for just regular maintenance types of things. A lot of cities, Lehi just adopted a recreation RAP tax is usually what it's referred to. We're calling ours our park tax. But it can be used for recreation, parks, things like that. And it's a 0.1% tax. And so those are there are opportunities to do things. At Lehi, we're in a situation where we have a population that's growing really fast, and we actually have a fair amount of park land that we've purchased and dedicated, but we're having a hard time getting money to develop it. So this will help us do that, and I think people will be pleased with how that money's spent. Other types of government services do have a fee involved with them. These types of government services you usually see in your general fund, and the fee a lot of times doesn't cover the full cost of the services, things like recreation centers, swimming pools, golf courses. The reason there's not really some private person hasn't come and put together a swimming pool that's only open for 3 months of the year is there's probably not really a model that works. And so a lot of times those are subsidized through other government revenues.
Hi, yes, sir. Jennifer Carver, Syracuse City. So I have a question about, it goes back to the property tax. So we have, I'm sure every city's familiar with the American Homes for Rent in our city, and they own probably over 200 houses now. They just bought up 2 new developments that are completely theirs for rentals. So they're basically running an apartment complex, horizontally in our city. So when they pay taxes on those houses with the markup that they're charging their renters, how does that work in tax purposes? Does the city get any of that back from what they're making off the residents in that city?
Yeah, so I'm going to say 2 things. One, I mentioned before that your primary residence, you get a 45% tax exemption. That applies to apartments. Like if the dwelling unit is used as a primary residence, then it still gets that tax exemption, so apartments do, and if they're long-term rentals, they should. Now, if you're talking, I don't know if these companies are buying these homes long-term and almost treating them like apartments, then yeah, you're probably not getting any tax benefit other than it would be if they were owned by the residents, if that makes sense. Now, I know a lot of cities have some of these VRBO, a lot of those types of things in the cities, and those, actually, they should be paying, the innkeeper tax, yeah, just like a hotel would. They should, but if it's like a long-term rental, like an apartment, there's probably nothing, I mean, you get property tax, but no more than if it was the homeowner that owned the home. Yeah, go ahead. Okay.
Thank you. My question, we just mentioned Airbnbs or short-term rentals. How is that taxed, and how is that money then passed on to the city?
Yeah, so you very likely have some kind of a business license that they have to have. So there's revenue that comes in. And if they're legit, like VRBO or Airbnb, they've, I think, got to the point where they should be collecting that. And it's paid, I think also, Roger might even know, I think it's paid through the tax commission. Like
They're just like a hotel or motel. They're, whatever appropriate taxes are owed on those, they pay. The challenge with Airbnbs, or using them for whatever the short-term rentals, they could escape taxation fairly easily. And that's the big issue, is knowing where they are. But if you know where they are and what they're doing, they're just like any other short-term rental, motel or hotel.
So is that, sorry to belabor. So if I were to rent one, I pay a fee, that landlord or owner then pays taxes to the state, and then that's passed on, or like, they don't write out a check to Bountiful City.
What they do is they would be required to collect sales tax on the transaction. That sales tax or whatever appropriate transactions then go to the state of Utah and are remitted back to the location.
Yeah. So as a city, there's a 1% kind of transit tax that you can charge locally. That should come back to you. Do you want to go to that question? Okay, go ahead.
I just want to pull on that thread a little bit more. Apparently, we've hit a nerve here
Yeah.
with a lot of us.
I should have done research on this part before I came in.
So obviously, these institutions are creating profit for themselves. How do income taxes work in that scenario? Let's say they own half of our city. Do we get any of the income tax back to us?
Yeah, income tax is just a state. Like there's
Right.
it would go to this. There's no income tax benefit that
So-
would
so
come
if-
to a local.
So if a city is completely filled with rentals, they really get no benefit from that whatsoever.
You get sales tax benefit.
Short-term
So
rental.
sure, just like anything
Yeah.
else. But
If it's, like I said, if it's, and I realize Lehi's getting this too, where a lot of out-of-state companies are buying up homes.
Right.
To rent long-term. And
so there's a
There's
lot
probably
of
no
profit
benef-
being made, but no benefit to the state of Utah or the city.
no more than any other home that would be in the city.
They're just a residential home owned by an out-of-state interest.
Yeah. But they don't even pay the non-primary resident property tax. They pay it as if it's a primary resident.
And that's what my question's related to. Some of these short-term rentals, how does that work tax-wise if it is a primary residence that the person rents out and just leaves and stays with someone else and then comes back after the rental is gone? Does that change the impact on the taxes that are collected? Can it be counted as like a hotel room if it's somebody's primary residence that they're just
Yeah, so
walking away from?
if I rent out even a part of my home, like some of these VRBOs are that, right? You just rent out a floor or a room or something like that. That's considered, just like Roger was saying, that's going to be taxed just like a hotel would be taxed. So if I were to, go away for the summer and rent my home out all summer through VRBO and come back, yeah, all of that should be subject to sales tax and room taxes as well.
That's not saying it's easy to enforce.
Right. I do think, I've read a little bit, VRBO and Airbnb are making some efforts to do that, but they don't necessarily have a specific benefit to push it, like you might need to push it
It's
a
the
little bit.
private person who does it on an irregular basis, don't have any knowledge of. The big entities have agreed
I
to
think
collect
are
the
doing that,
taxes.
yeah.
Bear in mind, the state has 6 times as much interest as the locals do in terms of sales tax. I mean, it's not as though we've got less of an interest or more than they do.
Hi, I was looking in the book on page 102, and I hadn't realized this. At the very bottom paragraph, it says, "A resort community is one in which the transient room tax capacity exceeds 66% of the permanent census population." And that's an extra 1.1% sales tax. So as I read that, and I thought about all of these, you got hotels, you've got nightly rentals, all of these other things. I mean, there could be There could be a number of places that actually fall into that may not be on the resort category that you have, is that correct?
Yeah, so as I understand it, like I haven't worked for a resort community, but yeah, if you're in certain communities, you're allowed to charge an extra sales tax on everything, right?
It is
Yeah.
a formula. It basically says you have to have enough designated, what are deemed transient or hotel, motel campgrounds, and there's a specification under the law of what those mean. They have to be 66% of your permanent population. There are only 17 communities in the state
Yeah.
that qualify for that.
And the long-term, like the company that comes up and buys a bunch of homes and rents them to families for long-term, those aren't in that number, right? It's just people who would be staying there in hotels and temporary lodging.
Basically, with the exception of Park City, which is the largest one of the 17 cities, they are relatively small communities that have a lot of hotel, motel, or transient facilities.
Maybe a Springdale or something like that, huh?
Springdale, Torrey, Garden City, that's. Yes.
Moab might be one.
Moab, we all know what they are. They're tourist facilities, tourist communities associated with national parks and other places.
Yeah. He's got a microphone right there by you.
So I want to go back to this truth in taxation.
Yeah.
All of us in the room probably are going to be Scrooges and get no ghost visits this year because we got some issues coming up. We've got, you mentioned our CPI is going to be 7%. So I always have a hard time that the staff is the one that comes and says, hey, I want to raise, but we'll work through that. But so here we're going to have some pressure on wages coming up. Our public safety, if you're along the Wasatch Front, public safety costs are going to be raising quite a bit with some pressure on wages that way. So most of us will be going through a truth in taxation, or I would assume that a lot of us could have that pressure to do that. Can you walk through a little bit more? So that's going to be in August, we have that truth in taxation. How do the residents challenge that? And if they challenge it, then it goes on the ballot. Is that just an understanding how that
Okay,
works?
I'll try to do the 5-minute truth in taxation. I do, yeah. So you may understand this, you may not. The way property tax laws work in the state of Utah, and I'll just use the most basic example. If I have a city and nothing is built in that city for the whole year, but properties in that city increase 10%, then I need to decrease my property tax value 10%.
It will be decreased for you.
Yeah, that's what we call the certified tax rate. The certified tax rate is intended to give you a rate that would give you the same revenue as last year, and you'd only get new revenue based on new things built in your city. So you can have situations where you may propose a tax rate that is actually lower than the previous year, but would still be considered a tax increase because it's higher than the certified rate. So anytime you choose as a city to adopt a property tax rate that's higher than your certified rate, you need to go through this truth and taxation process. And really what that is you're going to have a special public hearing on a date determined by the state. I think it's actually in state code what dates those need to be. And you have to publish a couple announcements. I think they've bettered those a little bit. I haven't had to do this for a few years, but they used to actually be, you publish these quarter-size newspaper advertisements that, in my opinion, when they're somewhat intended to stir up dislike, I guess.
They are
whatever.
deliberately misleading. I
Yeah,
will put that
and
out.
it used to be kind of misleading in the percentage they would make you use, and we won't go into that, we don't have time, but, so you have to publish that, and you have this big public hearing, and it usually goes really poorly. So I've been in a few of them, and I was one in Pleasant Grove where we were trying to build a fire station and use a property tax increase to do that, and it's not very fun. You kind of have to call your mom after to just see if anybody still loves you, and you go to the grocery store and you're a little bit scared about who's going to find you, and it's actually really interesting. So property taxes, you can, like we do utility rate increases most every year at some level, 2 or 3%, not a lot. But you can do a property tax increase, and sometimes it might not be very much. It might be a couple dollars a month type of an increase. And still, that's kind of the reaction you get. But you have this property tax, you have this hearing, so you advertise it on your property tax notice. You have the hearing in August. There's no requirement for a vote. You're just required to have that public hearing and listen to public input. You could have a hearing that goes really poorly and everybody tells you you're bad and stupid and they don't like you or whatever, and you can still go ahead and vote for it. There's no requirement that it would go to a vote. There's a referendum process that they could institute, which is a separate thing, which has happened a couple places. But so I guess I don't want to mix my words there, but the truth in taxation process doesn't require a vote, but you could have a property tax increase that gets referred, which happened, I think, in Highland a few years ago, and you would have to, I guess you could.
It's happened in 3 places in the
Yeah,
state.
so-
And the only thing I would add to this is what truth in taxation says is you have to tell the people what you're doing, a notice goes out, and then you have a decision to make.
Yeah.
The decision,
And your decision could be to
yeah.
not do the property tax, it could be to do a lesser property tax increase.
I would say most communities who do them regularly with smaller amounts tend to have a lot better success than saying this is the first time we've raised property taxes in 48 years, because the people said, then why have you been waiting 48 years to do it?
Yeah.
You get no
You do,
credit for that.
you do that, get that comment. And I would say even the Utah Taxpayers Association with Howard Stevenson, who kind of helped put the truth in taxation laws together, would tell you that most cities should go through this process every few years. They would probably say every 4, 5, 6 years. Because just like Roger was saying, if you end up doing a 50% property tax increase, one, it'll be so horrific you won't do it again for another 20 years. And people, I think, generally can accept, if you, as a homeowner, every couple of years I get my property taxes raised a couple dollars. If I really understand that there's not inflation built into that number, I think that's more palpable. So I think my time's up, but. Okay.